In this video, guys, we're going to look at avoiding a wipeout. Stay tuned. Hey traders, warm welcome to you. Alright, so you know the score. It's the wipeout that kills us. Sounds obvious, right? But it's the one thing that will take us out of the game, and if you're out of the game, you can't improve. That's the way that I look at it. If you are out of the game, you can't improve. If you run out of capital, you cannot trade. You need to have capital. It's the lifeblood of a trader. Even if you're not at a profitable stage yet, even if you're not making money yet, even if you're bleeding chips slowly, you still need that capital to gain the real money, real world experience. And so avoiding the wipeout, the big heavy hit, the loss is essential, guys. It's essential for your career. It's essential not only for the fact you don't want to lose the money, but it's essential for potentially adjusting what happens to your trading career, full stop, right? One bad trade, one series of bad trades can wipe you out, and that's the end of your career. You know what, I've had enough of this, I'm doing something else. If you'd have just stuck with it and you hadn't wiped out, who knows where you could have gone? Would you have still wiped out further down the line? Maybe. Would you have got a year down the line and thought, you know what, it's not for me, I'm not the trader I thought I could be, I've got other things that I can make better money at, I enjoy more? That's perfectly fine as well. It's about enjoying what you're doing, and it's about getting the best kind of return on what you're doing as well. If you enjoy trading, love trading, then great. If you're getting a good return on it, then it's perfect. If you're not getting both of those, then you go elsewhere. However, back to the point, you don't know where it will go. So it's so important, guys, have I stressed this enough, to avoid this wipeout. So how do we do it? The obvious thing, and I'm going to keep it broad, but I'm going to drill down into this a little bit, is the risk management approach. So the two main things you need to be doing is managing your daily risk, and I'm looking from the day trader's perspective here. If you're a swing trader, you might want to look at quarterly, monthly, whatever. That number is so key. It's so key, and especially more from a day trader's perspective, because it can mount up. You've got 5 trading days in the week. Okay, if you say to yourself, right, I'm okay losing £500 a day, okay, £500 a day, you might say that and think that's fine. But what if you have 5 losers? If you have 2.5 grand worth of loss, how is that going to affect your trading account? I almost wager that unless you've got a 200 grand account, which if you're a beginning trader, you probably don't need to. Even if you have access to 200 grand, you probably shouldn't be just stuffing it all in a trading account. You should be a bit more measured with it. I would guess that that is the number you don't want to be losing. And when you think, well, actually, no, I'd never lose that. But when you think about it, you're still risking £100 on a trade. You're still going into a trade risking £100 and saying, well, I'm prepared to take 5 losing trades a day. Before you know it, you've got 2.5 grand at risk just in that short window of time. And we don't realize how much we're risking and how close we are to the line, because it's not about the capital, guys. It's not about saying, right, well, I've lost 3 losing days in a row, I'm down £1,500. It's not about that. It's about triggering something in you that says, I didn't want to lose £1,500. I didn't want to lose £1,500. I don't like this. I want to get it back. Bang. You're in the danger zone of the wipeout. You have now entered the zone of, I'm going to do whatever I can to get it back, because I just want to get that back. Because if I get that back, not only will I be back to where I was in my money, but I'll feel better about myself. Game over, man. It's game over. You can't get to that point. You have to look and say, right, what could happen? Oh, I could have 5 losing trades in a row. I could have 5 losing days in a row. I'm day trader. I'm vulnerable to this. I'm a swing trader. I'm vulnerable to this. And so you've got to dial it down and say, well, okay, if I lost £500 in a week, would that be devastating? I could probably live with that. Now your number becomes 500. Look at the order of magnitude in difference between 2.5 to 500. All right, now we're risking £100 a day. So what's that per trade? Well, you know, I can't really trade at 5 trades. Okay, well, how about you cut the trades down? How about you say, well, 3 trades and I risk £30 a trade? You start to say, well, there's not a lot of money, but you have to think like this. You have to think like this, because you just don't want to get to the point where you suddenly look at your account and you go, I didn't want to be in this position. That is the key, guys. A lot of people talk about, you know, losing money, and yeah, losing money is losing money. But for me, and I'm almost certain for many of you watching this, it's that. You've looked at the screen and gone, man, that account, I didn't want to lose that much. I've gone from Monday to Friday or whatever it is, 2 weeks, and I'm a position now I did not want to be and I do not like. Flick, there goes the switch. You're now trading from a different perspective. And that's why I want to kind of really emphasize in this video, guys. It's not the money. Yes, it is. We don't want to be losing money and having the wipeout. We don't want to get to the point of trigger where we end up doing things that we know are really going to accelerate the wipeout, because when that's flicked, we start doing increased trading size. We start trading instruments we never traded before because we want to get it back. We want to feel better about ourselves. We want to get that 2,500 back. We want to see that account balance back to where it was. That's all we want to see, and that's all we're focused on. And because of that, we're trading from a place that's never going to serve us. So even if you're saying, right, okay, well, I can't risk just £30 a trade, then you need to reduce the number of trades that you take in the week and still reduce that. So say you need to save £500 a week, maybe then you say, okay, well, I can take 5 trades in the week at £100 risk. Or I can say, okay, well, I'll take extra, you can work with that. But the point is, guys, is that always work from the worst case scenario, because you never want to be in the position where you look at your account and you go, I didn't want to be in that position. You want to always be looking at your account and go, right, this is not where I expected to be. However, I've allowed for it. This drawdown is within my parameters. I don't feel any different about it. I just know I've got to carry on executing. There's a distinct, subtle difference. I hope you can see the difference between the two. One is almost devastation of, realization, hey, that's not where I wanted to be. And then you go on the treadmill of trying to get it back, and I would say that's when you end up wiping out the whole lot. The other is, okay, well, I'd prefer to be up, but it's part of the deal. I feel comfortable. Let's keep moving forward. Distinct difference, and that comes down to the risk, and it comes down to thinking about the worst case scenario for your account and not allowing yourself to get to the point where that could be a potential. I hope that's made sense, guys. If it has, a thumbs up, much appreciated. And if you've been there, comments in the comment section below. Let me know your thoughts on this. If you've got any other suggestions for how to avoid this wipeout, and if this has resonated with you, again, a thumbs up is appreciated. Take care. Bye-bye.